Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Elisa Piscopiello. She's an ETF Analyst at LGIM to discuss key themes in cybersecurity, leveraging AI, and cyber stock valuations. Elisa, it's great to have you with us. Welcome to TradeTalks.
Hi, Jill. Thank you.
You got it. And Elisa, give us some reasons to be excited about cybersecurity today. What are some of the key underlying themes that you're looking at?
First of all, the underlying theme is exciting. We live in a world that is reliant on tech, and cybersecurity is essential. There is actually a huge mismatch between the cost of cybercrime and investments in cybersecurity today, and this mismatch is set to persist. So the both costs and investments are set to go up by 30% over the next 2 years, so by 2025. But actually, these will increase at very different, they have different scales. So the costs of cybercrime are about 20 times larger than investment in cybercrime, with costs reaching up to $10.5 trillion by 2025. So a huge mismatch. And secondly, another reason to get excited today is the boost that artificial intelligence is providing to cybersecurity, actually in two ways. So from one side, we see the adoption of AI solutions by cybersecurity companies. AI can decrease the amount of time to identify attacks, and so can make solutions more efficient. But on the other side as well, cybersecurity can be a solution to AI-powered attacks. So the industry has to play a bit of a catch-up game with this sort of attacks and try to use solutions to identify bad actors, prevent threats, and even deaths. We have seen the healthcare sector has been super impacted by cyber attacks, and even a couple of deaths have been reported already that could have been prevented if medical records of patients wouldn't have been hacked.
Is it too late to enter the cyber trade? What do valuations look like relative to other areas in tech?
Actually, relative valuations compared to history and also other areas like artificial intelligence itself or technology look pretty attractive now. So if we look at PEs or EV sales, we're looking at PEs of below 30 times, and this is lower than the current level, and also the average long-term level is lower than technology, so Nasdaq 100 firms, and artificial intelligence peers. If we look at history as well, over the past 3 years or so, valuations also look cheaper. So definitely from a valuation standpoint, cybersecurity firms look cheaper than history, and also tech and AI. Also the market today is still, we have talked about cybersecurity for years, but the market is still underpenetrated. So there is a huge total addressable market that could be captured of up to $1.5 trillion. And this is 10 times larger than the actual vended markets. There are areas such as Internet of Things, operational technology, cloud security, application security, and operation management, for example, that for which the penetration rate is still below 5%.
And finally, Elisa, how would you think about positioning when you think about large and small players in the space?
Well, large players can definitely give access to investors to profitable businesses. So companies that have money, that have capacity to invest in solutions, acquire smaller specialized players, and also sell packages in bundles. But on the other end, smaller players tend to be the very pure players, so the key companies in the cybersecurity market, and therefore it's important to get exposure to those ones. They represent high growth opportunity, and there could be space for more acquisitions in the future as well. We certainly can't guess the winner of the future, so a good idea could be to invest using a portfolio such as an ETF that gives exposure to cybersecurity companies in a diversified way, so a diverse basket, but very centered to the theme, and that uses a transparent approach.
All right, Elisa, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.